hello and welcome to this Moneycontrol live stream. It's a Friday today and we are knocking at the weekend, but welcome to a fresh new edition of Morning Trade. I'm Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the cues for trade, the stocks in news, and of course, we'll also be getting you the Moneycontrol Pro research team that put together a Make in India index that comprises of 14 stocks to capitalize on the Make in India theme. We'll tell you what those stocks are a little later on the show, and of course, we'll also be getting all your stock-related queries answered by our expert on the show. So if you have any queries, send them in to us on our live feed and we will have them addressed. But before we do all that, let's take a look at the top headlines at this hour. Wall Street closes higher overnight. The S&P 500 sets a new high for 2023. The Dow gains for a third straight day, while the Nasdaq adds about 1%, on track to record its sixth straight week of gains. Eurozone slips into a recession. Revisions to growth figures show GDP falling by 0.1% in the first quarter of 2023 and the last 3 months of 2022 as consumer spending shrinks on higher cost of living. China's CPI inflation for May comes in at 0.2%, in line with expectations. Stocks in the Asia-Pacific trade largely higher. The SGX Nifty is signaling a higher start above that 18,700 mark for the Indian markets. And stocks in focus, sources say the Canada Pension Fund will sell 1.66% stake in Kotak Mahindra Bank at a 5% discount in a deal worth $754 million. SBI's board, meanwhile, will meet today to consider fundraise through debt for the financial year, while Hindustan Aeronautics Board is set to consider a stock split at its board meet on the 27th of June. Also on the show today, the MC Pro research team has designed a Make in India index comprising 14 mid and large cap stocks that stand to benefit from the domestic manufacturing push to help investors in their wealth creation journey. We get you more on that as well. Well, let's get on board the technical expert on the show without any delay to, discuss the trade setup first. Good morning, Raja. Good to have you on the show. In fact, joining us is Raja Venkatraman of Neotrader. Hi, Raja. Good to have you on the show. We did conquer that 18,700 mark day before, and we managed to stay above that level yesterday till the time the RBI policy was announced. And then later on, we, kind of gave up those gains and ended with losses. But do you expect the Nifty to, cross the resistance band of somewhere around 18,738 in today's session?
Yeah, considering the way, good morning Nandita, the entire premise of the RBI maintaining a pause mode was achieved yesterday, and this is largely based on the positive cues which are emerging in India all across. You can consider the GST, you can consider even the kind of auto numbers, the Q4 numbers. So overall, there is a positive momentum which is going on, and the market breadth is definitely very positive. So at higher levels, there is a profit booking which one should always keep expecting, because we are definitely stretched beyond expectation. But definitely there is more room to go towards 18,900 is my opinion. And the primary reason for this is that the Bank Nifty has not yet fired in. And considering the way you saw some bit of profit booking here, I would definitely see that there is some short inducement happening at around 44,500. So I would definitely keep a watch, use dips to buy into, because I don't think the index is done yet. Now, one of the reasons have been that there are also positive tailwinds emerging from the global overseas cues, and there are some news flows emerging that probably there could be a reduction in the crude oil prices as well. So if all these things begin to flow, I don't think there is any reason for us to go short at the moment. So I would use all dips to buy into, and unless 44,000 is really given away, we should not be considering short opportunity here, and look every dips, because market is currently in a very positive frame of mind.
Right, markets are in a positive frame of mind. Hold that thought, Raja. We'll come back to you and discuss stocks and, of course, all our viewer queries as well. But, the MC Pro research team, as I had mentioned, has put together a Make in India index, which comprises of 14 mid and large cap gems that stand to benefit from, the government's Make in India push. And this will help the investors, in their wealth creation journey. Now, I have the members of the team who actually put together this index and were involved in the stock selection as well. So, let me welcome on the show Sachin Pal and Nitin Sharma from the team that designed this index. Good morning, guys. Good to have you on the show. Sachin, coming to you first. We will be flashing those 14 stocks on the screen as well. But tell us more about what's the purpose behind putting together this Make in India index, and how did you make the stock selection for the same?
Yeah, hi Nandita. So just to give a little background on the same, so we've had multiple announcements made by the government. So like to around 3 years back, we had the government tax code, and government has also been very vocal in terms of the import substitution story. So there have been a lot of import bans across various sectors, and then we've also had the PLI schemes which have got announced in the last couple of years again. So all of them put together gives a very strong push to the domestic manufacturing, and it usually takes around 2 to 3 years of time to get things in place. So I think that phase has already played out, and we're seeing the first benefits of the policy push coming through in the last 2-3 quarterly numbers across. So when you look at some of the companies from the domestic manufacturing space, all of them have reported very strong numbers in the last couple of quarters. And also there is a lot of buzz in terms of the order book and everything. So that has started to play out, and this is a multi-year structural theme. So the primary sectors which are definitely beneficiaries of this mega trend is the electronics manufacturing space, which some of which have got listed in the last couple of years. There's another set of companies from the pharma chemical space, which again are import substitution stories. And then there's renewables as well, which again got a very big push from the government as well. So overall, we have looked at most of these sectors to comprise the index, and we've also designed the weightages based on how the industry dynamics are, what the company is positioned, how the valuation of the company stacks up, and what could be the way going forward of the company. So that's the whole idea behind making this index. And this should remain a very structural long-term story for the company as well as the investors for the next few years.
Right. So that was the entire, idea behind forming the index, right? But let me come to you, Nitin. Electronic manufacturing services forms nearly 40% of the index. And some of the stocks you guys have chosen are Sharma, SGS, there's Avalon Tech, Keynes and Dixon Technologies, right? Now, why does Sharma has the highest weightage amongst all the 4 stocks?
Morning, Nandita. So talking about Sharma, it has been delivering a good set of numbers for some time. And while the margins have been soft in last 2 quarters, raw material prices of costs have come down, so this should improve the margins in FY24. Now, if you look at the guidance for the FY24, so management sees a 35 to 40% revenue growth and double-digit EBITDA margin. Now, another factor is that company remains well diversified in the EMS space, so catering to high growth areas and the transitioning areas, including automotive, healthcare, consumer IT, and telecom. Also, if you look at the order book, so it has increased from around 2,000 odd crores to 3,000 crores by the end of FY23. Lastly, the company enjoys one of the highest shares of original design manufacturing, the ODM, in its revenue, which is a net positive because it brings in better margin and tends to retain the existing clients. So when you look at the entire picture, you would see that while there are many players in this space, Sharma, considering its strength and the performance, still trades at discount to the peers on the forward multiple basis.
Right, Nitin, I also see that you have Balaji Amines on the index. What makes you think that Balaji Amines is the best placed within the specialty chemicals basket, given the fact that the stock hasn't really done all that well this year? Earnings were weak. We had top level exit as well, when the CFO had exited. So what makes you think that Balaji Amines has good prospects going forward?
Yeah, so right. So Balaji is a good structural story for the long term due to import substitution effect and as well as how specialty sector, chemical sector is structured. More recently, stock has been under pressure due to the macro headwinds, which include input prices, lower utilization, but and which actually affected the volume as well as realization and therefore revenue and the profits. This, however, should change going forward due to improving macros, capacity additions, input costs have coming back to the normal levels, and therefore reinforces our positive view, and we see a long-term investment potential in this stock.
Right, coming to you, Sachin, Borosil Renewables, why do you think this is considered a strong player when it comes to the Make in India index?
Yeah, so Borosil Renewables are actually like the only solar glass manufacturer in the country. So, in fact, they have nearly tripled their capacity in the last 12 months through inorganic route as well as the inorganic route. On the domestic front, they have nearly doubled the capacity, and they've also went ahead and taken an acquisition in the European markets. So that gives a really strong foothold in terms of cross-selling in the European markets as well. So when you look at the PLI scheme that the government has rolled out already, and the policy push that's happening across in the renewable space. So this remains a very strong play, and being the only player in the domestic market, and there are a lot of imports that can be substituted by this player itself. So Borosil Renewables actually remains a very structural story with almost 3x the capacity that they have. There can obviously be volume growth and earnings growth which can play out for the multi-years.
Right, it was so good having you guys on the show and, sharing the rationale behind, why you guys chose this stock. I mean, we could go on and on, but I'm afraid we are running out of time. So, Sachin and Nitin, thanks a lot for taking out time and joining in this morning and sharing all your thoughts with us. It was great having you on the show.
Thank you.
Right, on that note, let's go back to, Raja, and without any delay, let's talk about the stock of the day, Kotak Mahindra Bank. CPPIB, the Canada Pension Fund, will be selling somewhere around 1.66% stake in the counter, at a discount of 5% to current market price. If you look at the stock, I think over the last 2 days, it was among the top losers on the index. So among the private sector banks, how is Kotak, poised on the charts now, Raja?
Yeah, as you have already mentioned, the news flow could definitely impact the prices, and the prices have already been demonstrating this negative impact on the action as well. And I could see that the prices could dip into a support region in the region of around 1800 to 1820, where that could be a good place to consider Kotak Bank again. Till then, it would be a good short opportunity, which I'm seeing right now on the charts.
Right, a good short opportunity for Kotak. We also had a query. I think I've lost the gentleman's name. I hope that answers your query. But let's take up a query on Paytm. Rover has written in and wants to know your thoughts on this stock. Now, this stock, of course, hit a 9-month high in yesterday's session. We have brokerages turning positive, giving higher target prices. Do you think, now is the time to buy into the stock? Because, Street does believe that the stock is well poised to cross the 1,000 rupee mark soon.
Right, the stock spent a lot of time under a lot of pressure, and what we are seeing is that over the last 6 to 7 months, it has seen a steady upward drive, and that has largely been due to the constant attention it is gaining because of people buying into the stock, big funds investing into the stock, because overall the particular stock has got a good brand value here, and I can see that the price action is also indicating the same. So yes, we should be a buyer in Paytm. The targets are emerging towards 840 and 900 as a multi-week basis.
Right, that's the target to watch out for on Paytm. Let's take up a query on Grasim then. Satya CK has written in, wants to know the next level where he can make another purchase. How would you advise him to look at Grasim now, given the fact that yesterday at least it lost somewhere around 3%? Do you think this is the time to buy dips?
Yeah, see, if you're looking to participate in the cement sector, there are much better counters which one should consider instead of Grasim, because what I find is that the stock continues to have a very labored upward move but very swift downward move. So I don't think that one should stay invested into the stock. Instead, you can look at Ambuja Cement, or even you can look at JK Cement.
Right, that's the view on the cement space. We're getting a query on Rallis India from Raju Sabu. And, he wants to know your thoughts on the stock. It has just come off its 52-week lows. But, hasn't really done much in the last 1 month, but on a 6-month basis has shed somewhere around 25%. Should one avoid this one right now, or how would you play it?
So, considering the way it has been on the descent since the last 6 to 8 months, and the inability to revive from lower levels is clearly an indication that this stock should not be considered at all, because the market has shown a good upward drive, flashed a new high, but this stock seems to be still lying at lower levels. So it's best to avoid.
Right, best to avoid rallies India. Debu K has written in, wants to know your thoughts on Datamatics. Now, this stock in the last 1 year has surged over 60%. How would you play this one? What would you advise investors to do with this stock now?
Yeah, so the trend in the IT services as a whole has been quite positive compared to the IT majors, and I truly advocate all the IT related activities. We were speaking earlier about your Moneycontrol Pro 14 mid-cap Make in India index, where I was speaking about Sharma. So all the companies which are doing IT enablement of the services are the ones which are having a lot of demand. And yes, this stock has got a lot of potential. We look at dips towards 500 to buy into, and even at current levels, it looks to be a good bet for an upward drive towards 750 on a multi-month play.
Right, that's the view on the IT services pack. Then let's talk about DMart. There is an Motilal Oswal report which has upgraded the stock and has put a target price of 4,200 rupees. Post earnings, the stock hasn't done well. In the last 1 month, down 3%. Earnings weren't all that great for the company. But going forward, do you expect the stock to reclaim 4,000 in say 3 to 6 months time horizon?
Yeah, see, I definitely feel that this stock has lost its shine, and there are a lot of stocks in the FMCG space if you would like to consider. So though it carries a lot of brand value, it doesn't carry any value for the investor. So I would look to avoid it right now.
Right, avoid, demand. That's the call from Raja. Raja, what's happening with Varun Beverages? This stock, there are reports that this stock may exit the Nifty Next 50 index. And over the last 2 sessions, it has come under a fair bit of pressure. We have a query coming in on Varun Beverages from Ajit Kulkarni. How do you advise investors to approach this stock?
Yeah, currently, considering the entire setup, one should be looking to exit this stock. This stock is definitely in a very good space, and you can look at declines towards 1400 to buy into. So you should exit and look at 1400 to buy into.
All right, exit and look at 1400 to buy into it. We have a query from Pooja coming in on SRF. This stock was down yesterday, 2% or thereabouts. But if you look at the charts, it's edging towards 52-week highs now. Would you advise investors to look at this one on dips or, maybe get into it right now?
Yeah, see, when you look at the global specialty chemical area, they seem to be undergoing some consolidation, and that's why you're seeing that majority of the prices of the chemical sector are not able to generate that momentum. So in such a environment, it's better to avoid this stock right now because it doesn't call for a short, definitely, but neither does it call for a long out at the current juncture.
Okay, neither short nor long on SRF. Let's take up a query on Indian hotels. Hotel stocks, of course, have been doing extremely well. Kuntal has written in, he holds Indian Hotel and he wants to know your long-term view on this stock. Should you buy into it given the fact that there is a lot of demand when it comes to the hospitality industry and stocks are on an upward trajectory now?
Right. So Indian Hotel definitely post its stellar results have shown a very strong up move here, and what one is seeing right now is some profit booking. So this will continue to happen in this stock. So as a investor, you need to buy into the current levels and reserve some of your allocated capital towards Indian Hotel to buy also on dips. So the current dip level which I would suggest to buy on dip levels is in the region of around 360, and look for further dips towards 340 for further addition. So overall prospect is very positive. So I am looking the stock to double in the next 1 year.
Right. Well, that's the call. Then there's a query coming in on Infosys from Manish Kumar. A lot of sell calls coming in on Infosys, and the street actually prefers TCS when you compare the two. What's your view on this?
Yeah, see, right now what has happened is on the post its shocking results and the result impact which it created on the entire IT index itself, we are yet to recover from that, and that's what is creating this kind of a flurry of sell calls on Infosys. Yes, there is a case of concern, but what I need to caution here is that at the current juncture, it is showing some consolidation. So at this phase of Infosys, I would continue to use it only as an intraday opportunity, not as a multi-day opportunity on the short side.
Right. Look at Infosys on the short side as an intraday opportunity now. Well, I'm afraid with that we've come to the end of the query segment. But Raja, any recommendations for our viewers this morning?
Yeah, I would like to go in with long as well as a short. So what I'm finding is that Astral continues to its terrific performance, and it continues to form a new high. I would like to recommend it to buy at current levels around 1947 with a stop at 1925 for a target of 1980 and 1995. And I would like to go in with a short in Naveen Fluorine around 4600 with a stop at 4640 with a target of 4540 and 4515.
Well, those are the stock recommendations coming in from Raja this morning. With that, Raja, thanks a lot for taking out time and joining in and addressing all of your queries as well. Wish you a happy trading day and a very happy weekend as well. Well, with that, we've come to the end of this edition of Morning Trade. As I said, we are knocking at the weekend now, so have a great weekend. But for now, I'm out of the studio, but you guys don't go anywhere because coming up next is Opening Bell.